All right, Bulls and Bears, it is Thursday, October 14th, 2021. Thank you very much for being here. We've got a lot of economic news to catch up on today. We're going to talk about the shipping delays, the port delays, and what's being done to try to fix the problem. And if the problems do get fixed, will prices maybe stop rising so fast? Well, we're going to talk about it. We're also going to talk about the latest job numbers, the record numbers of people quitting their jobs, and we're also going to talk about how the stock market is rising supposedly because of bank earnings and not the money printers. Let's get started right here. Now, we know that inflation has been running really hot, off the charts, record breaking, rising prices. We're not just talking about the money supply, we're talking about the goods and products and services that consumers purchase. Well, it's not just consumers. Producers are feeling the effect as well. Producer price inflation sets record for sixth straight month. So there we go with the transitory narrative. That goes out the window. Inflation sets record for sixth straight month. It's not slowing down. And in fact, inflation is getting worse as we continue, not just for the consumer, but for the producers. What does that mean? Higher raw material costs, higher shipping costs. With the labor situation, companies are being incentivized to offer higher wages to try to fill the gaps of the wage shortages. And we have still a record number of people quitting their jobs. And what's going to happen when companies are forced to raise their wages to attract workers? Well, prices are going to rise even faster. So continue to expect inflation to continue to worsen. Now, in this article, it gives us a screenshot of what's being done. The current president trying to fix the supply issue, the bottlenecks. The Port of LA expands to 24/7 operations. A few reports ago, we showed you that dozens and dozens of ships are off the coast of California waiting to get into the ports. Private companies are doing their own cargo, their own unloading, and they're expanding their hours. We talked about that a few episodes ago. Companies like Home Depot and even Walmart. Right, but think about the big picture here. If we actually produced in the United States, if we had manufacturing, if all the jobs weren't outsourced years ago, not all the jobs, but most of them, then we wouldn't have this problem. We wouldn't have to wait for ships to unload and backlogs and labor shortages at the docks. But no, that's not allowed to happen. We can't bring back manufacturing because companies are always going to want to go to where the labor is the lowest price. And it's certainly not the USA. How can labor be the lowest price when the cost of living keeps getting pushed up by the money printers and therefore companies have to pay more, making outsourcing even more attractive for the companies that are still here? And it's still happening. Even companies that are still here are looking more towards moving production out of the United States. Here's an article right here. Kellogg's recently, 1,400 Kellogg's workers on strike as the cereal company threatens to move to Mexico. All right, now that's what was being reported here. A more recent article, Kellogg's came out and said, no, we're not planning on doing that. It's untrue. But apparently the workers disagree and their wages aren't rising fast enough to guess. Guess what? Not rising fast enough to keep up with the rising cost of living. So yes, even with inflation at a 30-year high, when you see producers having to pay higher prices as well, and when you continue to see the labor problems, companies being incentivized to pay higher wages, you're going to see more outsourcing, and yes, continuous, even prices rising even faster and farther into all-time highs. All right, now let's talk about the markets here. The Fed, they're talking about tapering. The stock market, not worried at all. Let's take a look at the market real quick here. Today on Thursday, as I'm recording this, Dow Jones up almost 500 points. We're approaching 35,000. All major indexes in the green. Oil, right around $81 once again. So with energy costs, consumers are going to continue to feel the pinch. Well, let's talk about tapering. What does tapering really mean? It just means you're cutting back or you're tapering off something, and it can be just a slight taper. So let's talk about somebody who drinks, right? So let's talk about an alcoholic, and they're drinking, let's say, 24 beers a day, right? Two 12-packs. And they say, okay, that's enough. I'm drinking too much. I'm going to taper. So this month on Tuesday the 20th, instead of drinking 24 cans, I'm going to drink 23 cans. but all the other days it's still going to be 24 cans, 2 12-packs. That is, by definition, tapering. So just because someone's tapering or cutting back a little bit doesn't mean it's going to have even a noticeable impact. And of course, the markets know that. And for those that don't believe me, let's go to the definition. Let's go to Merriam-Webster. Taper, to make or become gradually smaller towards one end. So gradually smaller, well, cutting back on 1 beer a month. So there you go. So that's the Fed right there, put in simple terms for you. And yes, people are still quitting their jobs. In fact, women are quitting more than men, and they're calling this the Great Resignation. This is out of CBS. And we're just now getting the August numbers, but it's not looking too good. Almost 3% of workers handed in their resignations in August. That is a new record. The number of people quitting rose to 4.3 million, dwarfing the number of layoffs from employers who cut 1.3 million jobs the same month. So think about that. Over 3 times the number of people that are getting laid off are actually quitting. And you would think that at a time when prices are rising so rapidly that people would be more desperate for a job. So what's happening? All right, I think most of you know. Now let's talk about the latest jobless numbers. And I guess it's good news here. It's what's basically being reported as positive news. U.S. weekly jobless claims dropped below 300,000. Producer inflation rising. We talked about that at the beginning. But the number is still 293,000. That's weekly. Multiply that by 4. We're still losing over 1 million jobs a month, or new jobless filings being claimed every month. 4.3 million people quit their jobs in August. Are those people going to qualify for unemployment? What are those people going to do? A lot of times, if you quit voluntarily, you're going to have a more difficult time getting unemployment. Also, another recent article, millions of Americans cut off from unemployment benefits still won't return to work by year's end. And you wonder why some areas still have the eviction moratorium happening. So we still see cities and some entire states still with the eviction moratorium in place. And we're well over 1.5 years since the Great Sickness, since the big shutdown, which was blamed for all the economic issues and the economic mess that we're currently seeing. And it seems like everywhere you look, there's not much real improvement. They're going to say it looks better. Of course, if you just look at the stock market, things look like they're getting better there. And who makes the most money? Well, the top 10% own about 80% of all stocks, and the top 1% own about 50% of all stocks. So who's making the most money here? Hope you're doing well at this time. Continue to prepare, people. Be well, everybody. Thank you for watching. Bye for now. Peace.